Hello, everyone, and welcome back. As we move into the weekend, the U.S. markets have officially wrapped up another dramatic week. And what a wild one it was for Dvlt AI, ticker symbol DVLT. The trading session on Friday, November 7th, 2025, was nothing short of a roller coaster. The kind of trading day that makes investors sit up straight and wonder what on earth just happened. When the closing bell rang, DVLT finished the regular session at 1.69 per share, an astonishing 24.26% gain in a single day. And even after hours, the stock didn't lose momentum. It pushed a little higher, adding another 0.04 or roughly 2.37%, closing near $1.73. At first glance, you might assume this was a clean, explosive breakout, maybe fueled by some game-changing announcement that set the market on fire. But when you dig deeper, the story gets much more complicated and, honestly, much more fascinating. That 24% surge wasn't exactly a story of unstoppable growth. It was more like a violent rebound after a two-day crash. The day before, on Thursday, DVLT had plunged more than 11%, and on Wednesday, it dropped over 10%. So Friday's spike wasn't simply a win. It was a tug-of-war between aggressive buyers and relentless sellers trying to claim control of one of the market's most volatile small-cap AI names. Now, why does this matter? Because it shows that the market's perception of Dvlt AI is torn in two directions. On one hand, investors see it as a futuristic, high-growth AI player, a potential next big thing in artificial intelligence and blockchain data. But on the other hand, the company's financial performance tells a very different story, and that tension is exactly what's fueling these extreme price swings. So let's break down what really triggered Friday's bounce. The main spark goes back to November 4th when the company announced something that immediately caught Wall Street's attention: a $10 million worldwide exclusive license agreement with Selex Holding Company. Now, this wasn't just another partnership headline. This deal positions Dvlt AI to tokenize and monetize real-world assets, specifically in the biotech sector. What does that mean? Essentially, Dvlt's platform will be used to transform valuable biotech data, things like genomic information, DNA data, diagnostics, and therapeutics, into digital tokens that can be securely tracked, traded, and monetized on the blockchain. This move brings together two of the hottest investment narratives right now: artificial intelligence and real-world asset tokenization, often called RWA. And there's another kicker. The deal includes potential milestone payments that could reach an unbelievable $2.55 billion if certain goals are met. Numbers like that naturally get traders' attention. Suddenly, a tiny AI stock with a share price under $2 is being linked to billion-dollar potential. And that's how speculative excitement starts to build. But that Selex deal was just one part of a flurry of announcements that hit within days. On November 3rd, Dvlt AI announced a partnership with Music Dash and NFHS, expanding into the music data analytics space. This partnership involves using Dvlt's AI tools to track and analyze music-related data, a move that suggests the company is trying to diversify its technology into entertainment and media industries. Then, on the very same day, the company made another eye-catching announcement: a record date of November 14th for the distribution of a Dream Bold Draft meme coin to eligible shareholders. That's right, a meme coin airdrop directly tied to its stockholders. This is an obvious attempt to grab the attention of retail traders, the same kind of investors who helped fuel meme stock rallies in names like GameStop and AMC. A meme coin giveaway isn't about institutional investment. It's about community building, hype, and bringing in the high-energy retail crowd that loves volatility. And just when everyone thought the news cycle had slowed down, on November 6th, the company dropped yet another press release, this time about a partnership with Rodney's Comedy Club, using its AI platform for live joke copywriting. Yes, you heard that correctly. The company's AI will be used to register and track original jokes and comedic material in real time. From biotech data tokenization to music analytics to meme coins and even comedy content tracking, that's a whirlwind of updates for any company, let alone a small-cap firm still struggling financially. Now let's pause and look at the fundamentals, because this is where things get really interesting, and where the market's optimism collides with reality. In its most recent earnings report for Q2 2025, filed back in August, the numbers weren't flattering. Dvlt AI reported revenue of just $1.74 million, along with a significant net loss. The earnings per share came in at 0.54, a huge miss compared to the analyst expectation of 0.14. In plain English, The company is losing a lot of money, and its burn rate is high. Profit margins are negative, and there's still no clear path to profitability. This creates the central dilemma for DVLT. On one hand, you have a futuristic narrative about tokenizing trillions of dollars in real-world assets using AI. On the other hand, you have a micro-cap company that's burning cash and struggling to show consistent revenue. And this is exactly why short sellers have been paying close attention. Short interest is a crucial piece of this story. On October 31st, Dvlt AI made headlines again by issuing an official response to a report from Wolfpack Research, which the company described as a malicious short attack. When a company publicly responds to a short seller, it signals a serious battle. On one side, you have the bears, traders betting that the company's stock will fall. They typically point to things like weak financials, speculative press releases, or high cash burn as evidence that the business is unsustainable. On the other side, you have the bulls, convinced that the company's technology and partnerships represent massive future potential, especially after the Celex deal. So how big is the short pressure really? As of the latest data, the short interest is about 7.27% of the float. Noticeable, but not astronomical. That's nowhere near the kind of 30–40% level that triggers explosive short squeezes. More important is the days to cover ratio, which is extremely low at just 0.14 days. That means short sellers could technically buy back their positions and cover in less than a single trading day because of DVLT's huge daily trading volume, tens of millions of shares. In short, while some traders dream of a multi-day short squeeze, the reality is that such a scenario is hard to sustain unless short interest spikes sharply higher. However, one metric that is catching the attention of retail investors is the fails to deliver (FTD) data. In late September, DVLT saw unusually large FTD numbers. For instance, on September 29th, nearly 12.8 million shares failed to deliver, and the following day, another 5.6 million. For traders on Reddit and other forums, high FTD counts often become a rallying cry, viewed as evidence of naked short selling or market manipulation. While it's important to remember that FTDs don't always mean foul play, they do help build a narrative of suppression, one that fuels retail enthusiasm every time the stock price jumps. So, for anyone watching DVLT closely, it's essential to understand these dynamics. You can check short interest data directly on Nasdaq's website twice a month, or use analytics platforms like Fintel or Ortex to track the live borrow rate, basically the cost of borrowing shares to short. As of early November, that rate sits around 11.5%, which is elevated but not extreme. For comparison, true short squeeze candidates often see borrow rates soar above 100%. Now, when does short selling cross the line into a coordinated attack? Usually, it involves more than just shorting the stock. It includes the release of a public critical research report, like the one from Wolfpack, timed alongside heavy selling pressure to amplify fear. The company's counter-response is a direct challenge to that narrative, and the tug-of-war between the two sides creates intense volatility. So, what do you think? Was Wolfpack Research simply raising valid concerns about fundamentals, or was it a strategic move to tank the share price? Share your thoughts in the comments, because opinions on this one are deeply divided. Let's talk a bit about the structure of the company itself. Dvlt AI is not a one-dimensional business. It's actually split into two distinct segments. The first, and the one getting all the attention, is the data science division, which handles AI, blockchain, and tokenization technology. This is the division behind the Celex partnership and the company's broader ambition to revolutionize how data is stored, traded, and monetized. The second division is called Acoustic Sciences, which is more of a legacy operation focused on wireless, high-definition audio transmission technology. While it's a legitimate business, it doesn't inspire the same excitement among investors chasing AI-driven growth stories. Most traders essentially ignore this segment when valuing the stock. Looking at ownership, institutional investment in DVLT remains extremely low, under 5%. You'll find big names like Vanguard and BlackRock on the shareholder list, but their positions are minimal, likely just small allocations in index-based portfolios. That tells us large funds are not betting heavily on this name. In contrast, insider ownership is high, roughly 28%. That means company executives and early backers still hold a significant stake, which in theory shows confidence in the company's future. But at the same time, there's been some insider selling in recent months, sending mixed signals to the market. Unsurprisingly, the heart of DVLT's investor base is retail traders. Online communities, especially penny stock and meme coin forums, are buzzing with posts about Dvlt AI. Some retail investors claim they're holding until the stock hits double digits, while others warn that it's pure hype without solid financial backing. The meme coin announcement, without a doubt, was designed to energize this retail base and keep the conversation going. So where does all this leave us heading into next week? Everything now depends on the next big catalyst, the company's third-quarter earnings report, expected around November 14th. This could be the defining moment for Dvlt AI in 2025. Management has guided for $12 to $15 million in revenue in the second half of the year, but investors want proof that all these partnerships and tokenization deals are translating into real money. The numbers will reveal whether the story is finally starting to match the hype. If DVLT reports a strong quarter, higher than expected revenue, narrowing losses, and concrete details about the CLEX milestone payments, the bullish case would strengthen dramatically. That could even force some short sellers to cover, creating a sharp upward move. But if earnings disappoint again, if revenue stays weak, cash burn remains high, and management offers only vague promises, then the bearish view gains the upper hand, and the stock could sink back toward its lows. This is what makes Dvlt AI such a binary, speculative play. One piece of news can send it soaring, while another can cut it in half overnight. Whatever side of this debate you're on, one thing is undeniable. Dvlt has captured the market's attention. Between the biotech tokenization deal, meme coin buzz, AI partnerships, and the battle with short sellers, this small-cap company is writing one of the most unpredictable stories in today's market. And as always, this video is for informational purposes only. It's not financial advice. Always do your own research, understand your risk tolerance, and never invest more than you can afford to lose, especially in a stock as volatile as this one. Thanks for tuning in. And if you found this analysis helpful, don't forget to share your thoughts in the comments below. I'll be watching closely as we approach that November 14th earnings date, because whatever happens next, it's going to be dramatic. This is not financial advice.